What's going on, guys, and welcome to another blockchain future. There's been some news today about decentralized finance, specifically around the tokenization of the stock market. UMA has, they're announcing US stock index tokens powered by UMA and DAI. I've spoken a lot about DAI. It is the underlying stable token on the Ethereum blockchain. And this article actually gets into how exactly they are tokenizing the U.S. stock market, and it's pretty exciting. Let me jump into it. UMA believes financial markets should be universally accessible. We are excited to move one step closer to that vision and announce that U.S. stocks is now live on the Ethereum mainnet. U.S. stocks is an ERC20 token representing synthetic ownership of an index of the 500 largest exchange-listed U.S. stocks. This means that anybody with access to the internet and digital money can participate in the U.S. stock market. You can buy U.S. stocks on DDEX with DAI here. There are some caveats to this, which I'll get at. It's at the end of this article. U.S. stocks is the first censorship-resistant and decentralized means of financial market access for crypto users today. Users can now deploy the world's first decentralized stablecoin, DAI, towards buying U.S. dollar denominated assets. DAI exists to create an inclusive platform for economic empowerment, allowing equal access to the global financial marketplace, said Rune Christensen, CEO and co-founder of MakerDAO. U.S. stocks is an exciting example of how decentralized finance can unlock economic opportunities for people regardless of geography or income level. So how does it work? Each U.S. stocks token represents $1 times the stock level index. The stock index level is calculated from the 500 largest companies listed on the New York Stock Exchange and NASDAQ stock exchanges. Here they have a diagram showing the Oracle, which feeds in the 500 NYSE and NASDAQ stock exchange company prices, which then feeds into the liquidity provider. They get into it further here. To create U.S. stocks, liquidity providers deposit DAI into UMA's trustless tokenization smart contract. As the value of the stock index rises, providers add additional DAI with the smart contract, enforcing a total collateralization of ratio of 108.5% at all times. U.S. stocks are free to trade until the initial expiration date, May 15th, when any token holder can redeem their U.S. stocks for redeem their U.S. stocks tokens for DAI at the final settlement value. So they're actually using a smart contract to feed this all in. So it is automated in that respect. Even with decentralized finance, oracles play a huge role in feeding the correct information into the decentralized financial system. As the oracles, most of the time you use more than one oracle to make sure the information being fed into the system is correct. So what comes next? This is only the beginning. Later this year, our partners will roll out more tokens for other assets, inverse exposures, and leverage. These products can trade anywhere that supports the ERC20 standard. And this actually ties back into the multi-collateral DAI that I've spoken about. The more underlying assets that is supported under DAI, then the better it will be at being a stable coin. Though I wouldn't necessarily put this asset as one of them. More stable assets like real estate or other assets like that. We believe the power of decentralized finance as a force for good. Today we're taking a small step toward unblocking barriers to financial market access. We look forward to the day when anyone with access to the internet and digital money can gain access to any financial market, creating a single permissionless marketplace for risk transfer. It says, please contact us for blah, 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 blah. Well, here's the catch down here. The collateralization requirement varies based on the volatility of the underlying asset. Based on an analysis of the past 18 years, 108.5% would compensate token holders for the 99.99th percentile of daily moves in the underlying stock index. And then here's the legal notice that I was speaking about at the beginning of the article. The products described in this material are available for purchase and sale only in jurisdictions outside the United States, in which such purchase and sale is permissible under applicable law. These products may not be purchased or sold by any person located or any entity organized in the United States, by any person whose principal residence is in the United States, or any entity with its principal place of business in the United States. If it is determined that any United States person, as defined in the preceding sentence, has purchased or sold these products, such persons will be subject to actions for the rescission of transactions and for damages. So then it gets into risk, but this paragraph here basically saying that if you're in the United States, you cannot do this. It is, if you're in the United States, for the most part, you can get involved in the stock exchange pretty easily, but it would be nice if we can get into this decentralized finance side of things. Hopefully this is something that changed, but this is a big step for DeFi because you're going to start seeing a lot of assets being tokenized, and tokenizing the top 500 companies on the NYSE and NASDAQ exchanges is pretty big. And it's a big step forward as we see more and more assets being tokenized and brought into the DeFi ecosystem. This is the UMA site. So UMA is a decentralized financial contracts platform built to enable universal market access. Use UMA's self-enforcing contract design patterns and provable honest oracle mechanism to create your own financial products using standards like ERC20. So they're setting themselves up to tokenize a lot of different assets. We are a platform for your financial innovation. UMA is designed to power the financial innovations made possible by permissionless public blockchains like Ethereum. Using concepts borrowed from fiat financial derivatives, UMA defines an open source protocol that allows any two counterparties to design and create their own financial contracts. But unlike traditional derivatives, UMA contracts are secured with economic incentives alone, making them self-enforcing and universally accessible. It gets into how it works. But this is a good thing. Obviously, like I said, we're going to see more and more of this stuff happen. A lot of this is not being really, I think a lot of people in the crypto space are not really discussing this stuff like they should, because I believe this is one of the bigger aspects of crypto and blockchain is the decentralized financial side of it. And as we see more assets being tokenized, it's just going to get bigger and bigger. And soon there will not be a need to use the legacy financial services. I know that sounds crazy, but why would you want to when you have a decentralized option? That's all I got for today. Thanks. Have a good one.